Hello, everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for April 16th through the 20th. So, I do talk about what I posted over on Facebook this week, the three major indexes, how they went up or down. My portfolio percentage, I think I went down a little bit over 1% because I'm heavily invested in Apple, which did take about a 7% dive this week. So, I'm going to be covering the indexes and about 8 different stocks that had some news kind of go on them this week. And then earnings for next week, we have a whole bunch, such as Google, Facebook, and a few others. So let's go ahead and get into this. If you are brand new to my channel, I do make stock market, investment, and soon real estate videos of where to go when you're getting started in real estate, what websites to check out, where to look for houses, who to get in contact, and stuff like that. So I've kind of been doing my due diligence in that area, and I think I got some fun information to kind of put out, so that'll all get started putting out here soon. So over on Facebook, posted a little bit about Netflix. They reported earnings earlier this week. We'll be covering that here in just a minute. Supreme Court to decide if online sellers must collect sales tax. Trump had been blasting Amazon for the last few, 2 weeks now. I know they had dropped down by about 10% or more. I know one of my friends at work, he's heavily invested in Amazon. And I believe he had bought some more during that dip, and they recovered right around 6% this week. And we're going to take a look at that more. Monday released my video that Marcus had increased their high yield savings account from 1.5% to 1.6%. I currently have some money inside of my Marcus account. I make about $50 or more just in interest every single month. So it's a nice little place to keep your nest egg. My wife doesn't let me invest the full amount, so I only have a little bit of our money invested in the stock market right now. A little bit, but I'm going to be using that money to buy a house, and that'll be a performing asset. So that's kind of like our plan there. Walmart, they're changing up their look online. Interesting. They went up a little bit, so they changed up their website to make it more appealing. We'll cover that here in just a little bit. Yahoo Finance talking about semiconductors on Thursday is what started driving Apple down. And Philip Morris, that had some bad earnings as far as people are beginning to quit smoking a lot faster. The number of people smoking is going down, which drove their stock down by it's like 16%. I know it's in my wife's portfolio. American Express, they released some earnings. They went up very nicely. They had a snippet in there that consumer spending is up, which is really good for the economy. They said that only about 7% of credit card holders pay their the amount that they owe on their credit cards month to month. I love putting every single thing on my credit card. A family of three, I end up between $2,000 to $3,000 on my credit card every single month with utilities, bills, food, anything I can put on there, and then I get it paid off, and then I make 2.5% back every single time. So I like using my credit card. And yeah, I was off today on Friday, so I did put out a video on Friday. I made a limit purchase of Apple at 165.50, I believe. I don't know if it was triggered, and I guess I'll have to take a look. I made a video kind of just talking a little bit during the market. I had a lot of work to do around the house while everybody was out, so I cleaned the house and made a video right towards the end. I want to do a live session. I was watching Ryan's channel, The Independent Investor, and just how I'm going to be moving offices. I'm going to be moving my office around. So I'm going to try and be doing some more live sessions once I get my office set up in the other room. So 40% cash. Okay, yeah, I had 40% cash on hand. So Apple took another about 4% dive on Friday. I did have my limit buys in on Friday. I'm not sure if it had triggered. That's something I'll have to go out and check out. So here, Apple went from $178 on Wednesday, now trading at 165.81. So if it did continue to tread down into the 165.50, that was my limit buy. That was the past. If you go back about 2-3 weeks prior, they had actually bottomed out at 165 or 164. So I believe that this would be like a good bottoming out point where I could add like $5,000 to $10,000 into my positions. That would put me a little bit into the negative, which would cause my portfolio to average down on my positions. Plus, increase my shares because after earnings, I do believe Apple will beat expectations. They're moving a whole bunch of money back from overseas. They're continuing to increase their subscriptions, their services, their everything that they're trying to put out, and all that money is going to be getting put to some good use. So that was everything that I posted over on Facebook. Now, I'm going to go ahead and refresh my page here to make sure I don't get logged off Merrill Edge. Okay. Oh, my kiddo is crying. I'm going to try and talk a little bit quieter. So, the S&P 500 this week moved up by 0.52% over the 5-day change. They were positive 3 out of the 5 days. Friday, they had a bit of a sell-off, but after we've gone so many days positive, if you go back over the last 10 days, they don't give me the 10 days here, but we've had a lot of green movement ever since early April. We bottomed out early April and then have just risen almost double from the bottom. And we did come down a little bit sharp recently, but that's not bad. Still down for the year by 0.13%. So overall, not too bad. Dow Jones, 5-day change, down 0.42%. A lot of this, let's see, what drove the Dow Jones? Procter Gamble, Philip Morris, Walmart, and Apple, I believe, were some of the big drivers down this week. A few others, General Electric, yeah, General Electric, of course, just drove them down overall for the year. But General Electric actually had some good earnings and moved up a little bit on Friday, but nobody was really paying attention to them on Friday because Apple was taking a dive. The yield curve was right about, almost evaporated going into the negative, so a lot of people were talking about that. And the NASDAQ 5-day change up 0.56%, still positive year to date by 3.52%. So those are your 3 indexes. Now, again, just kind of covering over some of the articles, some of the stocks that I was tracking this week. Bank of America and Goldman Sachs both released earnings this week instead of last week, where JP Morgan and Citibank and Wells Fargo had reported earnings. So Bank of America, they had reported that they did better than expected. The company did see growth, which was what it was expected with the lowering of taxes. All of that had already been sort of in in the stock. So the company did sort of claim success in order to kind of keep costs down, and overall a really good quarter. So not a whole lot of growth from the lower taxes and cost cutting, but overall it's what was expected. So they did move slightly higher in the week by 1.54%. Now Netflix was one that I was tracking on Tuesday, and it did very well on Tuesday. Of course, their stock drove up by over 9%. This is something I posted over on Facebook. They released their earnings. They did really good. They had a whole bunch of analysts upgrading them. I believe they had like 12 different analysts trying to upgrade them because they couldn't keep up with that rapid growth. Subscriber was up by almost I think it was like almost 2 million subscribers in the United States, and then 5 million subscribers overseas, just internationally. So they beat expectations, and they saw their shares rise by, they're actually up 70% year to date now. So lots of growth from Netflix. I'll be right back. I have to go get my kiddo a bottle or something. Okay, and we're back. Next is Goldman Sachs. Goldman Sachs reported earnings on Tuesday, and they actually did pretty well. They actually went down. No, yeah, they did go down on Tuesday by 1.65%. So the stock sold off at 1.65%, even though they beat Wall Street expectations, similar to J.P. Morgan, Citibank. Even though they beat expectations, their stock did fall. So financials on Friday they fell. Goldman Sachs and Bank of America. Let's go back here. Bank of America was actually positive, whereas Goldman Sachs did not. I know there's a couple YouTubers out there and a couple of investors I know that do have Goldman Sachs just because it's one of the biggest loan financial groups out there. So very good there. And MS, Morgan Stanley. So I think they were the last bank to report earnings on Wednesday, and they came in, I guess, right as expected as well. And the stock did end over the 5-day change up 2.79%. So Tuesday, they got sold off in anticipation for their earnings, but they did beat expectations. Their stock rose very nicely over the day at the start of the day and then trailed off, ending at very, very little, only 0.04% on Wednesday. So they had actually climbed up nearly 3% off earnings and then lost it all throughout the day. So, very interesting there. United Continental Holding, United Airlines, basically, I believe. I think it's United Airlines. I know we had that incident. There was the incident this week with the passenger who had got. It's always it's unfortunate that these little things happen. Stock did release earnings on. Let's see, was it Wednesday or Thursday? I think it was Wednesday, and they had reported record-breaking profits, and it was mainly because consumers they have lots of money to spend, so they wanted to travel despite the higher prices, and that continued to drive them a little bit further. I don't know if it was United Airlines or if it was Southwest Airlines, but I know Airlines, there was an incident that took place this week. So continuing on, we have American Express. And I posted this over on Facebook. American Express they shot to record highs. So I believe they're actually peaked. If we look at the year change here, they hit record highs. And this is all because they beat expectations, they beat earnings, they beat revenue, and it came over, expected. They increased their guidance going forward. They think that their rewards program it has lots of strong growth and it's able to help boost them because what we talked about over on Facebook, only 7% or 93% of users that use those cashback programs. The cashback cards, I noticed they have a much higher annual percent yield. So if you don't pay it off month to month, that yield, that interest is going to start eating it away. So if you put $3,000 on your credit card, you don't pay it off. Next month you're adding on like $25, $50 onto your bill, and that just continuously works against you, similar to how dividends and interest works for you. It works against you by not paying it off. I like credit cards. I'm a big believer of credit cards. I look for the best programs. That's why I do have my the best one that I've got is 2.5% back on everything, and it's unlimited. So I do like my cashback card, and up 20 oh that's 5-day change, up 8.34%. Again, Thursday went up very nicely. Friday simmered off a little bit just due to the market, and then up year to date 1.49%. Procter Gamble, they released earnings on Thursday as well. Yeah, you can see their stock here. I was a pretty good holder of Procter Gamble. I think I bought it back when it was 60 back about a year or so ago. And they're at 73.80, which isn't bad in itself, but they did come down hard on Thursday after they had released earnings. So down for the week by 5.83%. Year to date down 19.68%. So this is what dragged the Dow down on Thursday and I think into Friday. So they hit new lows and they're trailing right above the 200-day average, I believe. I think is what I was looking at. So this could be a good one to kind of jump into. It could be a good one to kind of just wait and let it sizzle. But Procter & Gamble, great long term, over 30 years of continued dividend growth. It would be one I would add to my portfolio during this time just to it's down nearly 20%. You're getting a 20% discount on this item right now. Think of it like a pair of pants. If you really like the stock, you really like those pair of pants, and they go on sale for 3 months out of the year at a 20% discount, would you buy into it knowing that, it could go further on discount and you could buy more or it can rise up? So next is ticker symbol TSM. Now this is the Taiwan Semiconductor. Now this one reported earnings on Thursday, and it caused a massive sell-off down 5.7% on Thursday, and this dragged down other tech stocks such as Apple and Intel because the company had said that their demand for smartphones inside their semiconductors wasn't where it was expected. So I talked a little bit about this, I think on Friday, is what caused Apple to dive on Thursday and Friday, just because the demand for phones is at a kind of low right now. But I think overall, I don't think the sell off on Apple was warranted due to just their news that they put out for this. Well, I guess we'll see on Apple's earnings report, which is coming up at the end of this month. So, uh, Taiwan Semiconductor down 8.68, year to date down 1.77%. And we have three more stocks to cover. Amazon. Amazon, they did not release earnings, I don't think. Let's see here. No, I don't think they released earnings. They did mention, I can't think of his name. Jeff. Yeah, Jeff. We'll just say Jeff. Jeff Bezos. Bozo. I can't say his last name right now. It's 1 in the morning and I'm having speech difficulties. Oh my goodness, my kid's crying again. I'm going to try and wrap this up as quick as I can because right now, kind of talking, he's not feeling too good and I keep waking him up and the wife's going to get very upset with me. So, Amazon up 6.76%. General Electric did very well this week, ending at an increase of 7.68%. Still down for the year by 16.68. Apple down for the year now by 2.07. It was a huge sell-off just within the last 2 days, down nearly 7%. I think this says 5.16. I think it was closer to 7. They had a 3% loss on Thursday. Oh, okay, yeah, just within these last 2 days of the week, they had a 7% sell-off. But it's down for the week, 5.16%. Okay. Earnings reporting next week. So this is the very last thing, very quickly. Some of the big ones reporting earnings next week is Apple, Google, Google Alphabet is Google. We also have Triple M reporting earnings, Caterpillar reporting earnings, Coca-Cola reporting earnings. We have AT&T, Facebook. I think we have Verizon down here as well. Netgear. We have Dunkin' Donuts here. So I'm going to go ahead and have this article in the description below, but I got to get off this mic because I keep waking up my kid, and I think my wife would jump in here and start, talking to me here. So I'm going to go ahead and end it there. So I do want to thank everyone for watching up until this point. If you did enjoy the video, remember to like, comment, and subscribe for future financial videos. If you have any questions about anything that was covered below or in the video, go ahead and leave it in the comment section below. I will always reply back to you guys. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided in my videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.